Welcome back, everyone, and today I'm going to be going through my portfolio. The account sits at $19,854, and we are really close to that $20,000 mark. I've been buying one particular stock, and I'm going to be covering that. I have discussed this in previous videos, but I want to show you in my portfolio and how much money is weighted towards this position. The first account I'm going to go through is the personal account. It has $606 in it, and this is in USD. I hold Berkshire B and VOO with almost 2 shares of Berkshire B and not much of VOO. And this is just because this is my cashback rewards that I receive from Wealthsimple Cash. Every month I get cash back for using their card, and I buy VOO with that money. So currently just under $15 of cashback rewards. All time I am up $50 in this account, and I have only had it since July, so only about 8 months or so. In the last year, about same thing, $48. The last 3 months, $12 up, which is 2%, which is quite solid. And just in the last week, I'm up 3%, $15.40. And this is just because Berkshire B is doing fairly well. They're trading at $308 US. The market is rebounding after some of those banks have settled some of their disputes in the US. The biggest account is my TFSA, and I only hold Canadian currency in this account. In the last year, I'm down 1%. Sorry, all time I am down 1%, which is $200. So I have $15,646, and the whole account sits at just under $20,000. So 3/4 of the account really is in this one portfolio here. In the last year, I'm down $2,000, 11%. But if you've been following along, the markets have been down 15 to 20% in some circumstances. So this is fairly reasonable going with the markets in general. In the last 3 months, I'm up 4%, $622. The Canadian markets have been doing very well in the beginning stages of this year. In the last month, down 3%, $450. So besides this bank hiccup, this portfolio would be performing fairly well. In the last week, up 1%, $115. The one position I want to discuss is about this bank dilemma, which is Toronto Dominion Bank. And I have done videos in the past about this company, but I have not really discussed how I've been entering positions with this company here. It's currently trading at $81, and if we just zoom out a little bit, we can see how it really came down from its highs. $93, $94 all the way down to in the mid 70s. If we scroll down here, we can see that I have 19 shares with a cost basis of $83.76, and this accounts for just under 10% of my whole portfolio. This is a relatively new position. I've really only been entered in this position since January and been buying down whenever possible. My cost basis is $83, and there's no problem with this company trading somewhere near $90 if we just zoom out a little bit. Yeah, 90 in the high 80s. So I'm taking my new deposits and purchasing more of TD Bank and looking to grow this position into a larger holding. So in hold, I am down 3.36%, $53 on this position, but I am not concerned about this in the short term. So other than that, there hasn't been much activity in my portfolio. I continually buy VDY, $20 on Wednesday and $20 on Friday. I currently have just under 104 shares and just under $4,300. And this is something that I might want to bump up my recurring purchases. So currently $40 a week into VDY, which is approximately 1 share a week. But maybe I want to increase that to maybe $80, 2 shares a week. And that might increase this churn and this compounding effect I discuss. Other than that, the only holding that has had activity is CMR, BlackRock iShares Premium Money Market ETF. This ETF holds T-bills and treasuries that are short-term and pay really close to what the going interest rate is. So if we just scroll down here, the yield is 2.6%, but on an annualized basis, this yield is more like 4% or 3.8%, and they pay this monthly. So currently, I have 9 shares of it at $450, and I actually just received that dividend today, and we'll check that out in a second here just to show you how much that was. So this is a position that replaces cash, in my opinion. If I want to buy more of TD or more of VDY, I will be selling CMR to do so. And this, if we just look at CMR quickly, It goes from 50 cents on January 25th to $50.08 on February 7th, and later in the month, $50.13 on February 16th. And by the time their ex-dividend date rolls around, they are about $50.16, and they pay that 16 cents out as a distribution to the investor, which is what I would receive every month. Then, after that cycle ends, the $50 resets, and that's the principal again, and it goes through this cycle every month. But if we just go back, we can see that when interest rates are low, the cycles actually are only maybe moving 1 or 2 cents at a time throughout 2021. If we go further back, the prices maybe go from 5 to 6 cents in 2019. So that's the normal amount that they would be paying on a normal cycle. But just recently, since interest rates have increased, this cycle has actually grown substantially and can provide investors some value if they just use it properly. You can see up to 20 cents per unit per month, and that is significant when I'm looking at holding CMR instead of cash. If you don't already know, this portfolio is a dividend-based portfolio, so I'm not focused on share appreciation as much. If that happens, that is fantastic. I do want to save principal and protect principal, but I like to see progress through dividends because this is tangible and we can reinvest these dividends where we deem necessary. So the most recent dividends I've received is Pembina Pipeline at $2.61. That was paid March 31st. And this is CMR's monthly dividend that I just discussed a moment ago, $1.03. And this is just because I held CMR instead of cash. That's all this position is. I earned $1 instead of earning 0 on my cash. This is how I've been tracking my dividends. I have my TFSA dividend account, my personal dividend account, and my RSP dividend account. In March, I received $63.41, and I've just included this percent change on the right of this column here, just to show how it compares to the last month. And sometimes it's positive and sometimes it's negative, but in the end, after this account is fairly large, I want this number to be a tangible amount that is actually congruent to what my portfolio is compounding at. Maybe it's 2%, maybe it's 5%. It depends on how it's been structured. But in the end, I want these numbers to be more stable. And it might not be stable because these are month to month. If we look from quarter to quarter, so Q1 of 2022 and Q1 of 2023, those two quarters should be compared side by side and we should be able to get a percent change. So that's later on when the portfolio is a little bit larger and we can compare them side by side. In 2022, I received $678 in dividends. In 2023, I've currently received $200 in dividends. And this is just going to show you how the compounding effect is going to take this portfolio to the next level. Once we get this portfolio large enough, we can just buy more shares of the things we already own and be paid more money every month. So we might actually receive $678 by June of this year. If we just look back through some of these months here, March was $63.41, February was $38, January 2023 was $93, almost $94, right? So if I just look at January of 2022, it was $59.39. So that is what I want to be comparing to year over year. In February, I received $22.28 in February of 2022. In this year of February, I've received $38. So that is a concrete example of how I want to value this portfolio. Next year, if we're talking about the same compounding effect, next year in January, this could be like $150 or more, depending on how this portfolio grows. But that's the projection that I want to highlight here. The last portfolio I have is an RSP, which holds only US currency. In this portfolio, I hold LQD, which is a bond ETF. I hold 1 share of it. I'm not too concerned with this ETF yet, but later in my life and in years down the road, I want to increase my bond position. And that could be through various ETFs, but right now I've just allocated this 1 corporate grade bond ETF. I have 1 share of QQQ, which is a high growth tech ETF. This follows the NASDAQ, and I'm actually up 15% on it, $43. So I bought this at a pretty decent price a couple months ago. The one position I've been growing in this portfolio is SCHD. It's traded at $73.16, and I hold $1,200 US in it. SCHD is trading at $73.16, and my average price is $74.75, so just above what it's been trading at. But if we just take a look at the charts, the 3-month chart shows us that SCHD was trading at just under $80, and just recently has actually dropped to 70, just above 70 here. So in the last year, you can see a similar trajectory where it dips to the low 70s and then increases into the higher 70s. And it does that quite frequently. This is an ETF that holds value companies, so companies that are necessary, that pay dividends. So it could be Walmart, Home Depot, Coca-Cola, ExxonMobil, and some of the bank stocks in America. This is an ETF that has a wide variety of companies in it. So this is an ETF I want to buy quite frequently because they pay monthly dividends very similar to VDY in Canada. If I can get this position large enough, I can reinvest these dividends into other companies at a significant rate. So this is why this is the largest position in my RSP. If I can get this ETF to pay me $100 a month, that means that I can buy $100 of other ETFs or other companies without having to deposit that $100. So that's why it's significant in this account. This RSP is a registered account, and you do have restrictions on how much you can contribute. So this is why SCHD is my core holding in my RSP. The last holding in my RSP is VOO, which is an S&P 500 ETF. It's similar to QQQ, but just has a little bit less risky stocks in it. It is still classified as growth, but just not hyper growth. I have just under 2 shares, and I'm actually up 2.5% on it. But this is an ETF that I want to be purchasing quite regularly too, because it is going to be a driver of growth overall, and not so much the dividend payments. So this is an ETF that I could be buying with the funds I receive from SCHD every month. If you want me to go through an RSP and how an RSP works with taxes, with your personal income, just comment below, because I can really break down the rules and regulations around an RSP so that you can understand some of the strategies I discuss here, and it might make more sense. Just comment your thoughts below if you would like something like that. One of the last things I want to discuss is the dollar amounts in these portfolios. So we can see my total account sits at $19,854, and we can see individual accounts here. So my personal account is down 5.89%, my RSP is up 2.83%, and my TFSA is down 1.26%. When I make a video in an update, my total amount might change. Last month, I might have made a video that had said $17,500, and my portfolio is currently at almost $20,000. That does not mean that I actually made that $2,500. I could have made that much money in my portfolio, but you have to remember that I'm contributing most of this money, in fact, in this case, all of this money into this portfolio, because when market conditions actually work out well for the investor, you want to be situated where your money is invested and can perform more and make you more money than you would have contributed. So I have contributed all of this money, $19,854. So don't be confused if you see the numbers jump up or down on a regular basis. You have to remember that I, the investor, am continually contributing money into these portfolios. Just let me know in the comment section if you want me to break that down. I have a systematic way of contributing into each of these 3 accounts, and it makes it easier for me to do my personal budget and my personal finance, and it allows me to not worry about how much money I'm putting into these accounts because they are already preset. So just comment below if you want me to break those down for you, and it might make it a little bit easier to see how much money I am or am not making at any given time. So thanks for watching. If you like this type of comment, like and subscribe, and comment any other video ideas down below. See you next time.